Thank you for standing by. This is the conference operator. Welcome to the Tattooed Chef Analyst Day webcast. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. To join the question queue, you may press star then 1 on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star and 0. I would now like to turn the conference over to Rachel Perkin-Elsh, Investor Relations. Please go ahead.
Thank you, and welcome to Tattooed Chef's first Analyst Day. On the call today are Sam Galletti, Chief Executive Officer, Sarah Galletti, Chief Creative Officer and the Tattooed Chef, Stephanie Dykman, Chief Operating Officer, Matt Williams, Chief Growth Officer, and Chuck Cargile, Chief Financial Officer. By now, everyone should have access to the presentation, which is available via webcast and will be posted on our website at www.tattooedchef.com. Before we begin, I'd like to remind everyone that the prepared remarks contain forward-looking statements, and management may make additional forward-looking statements in response to your questions. Such statements involve a number of known and unknown uncertainties, many of which are outside the company's control and can cause future results, performance, or achievements to differ significantly from the results, performance, or achievements expressed or applied by such forward-looking statements. Important factors and risks that could cause or contribute to such differences are detailed in the company's filings with the Securities and Exchange Commission. Except as required by law, the company undertakes no obligation to update any forward-looking or other statements herein, whether as a result of new information, future events, or otherwise. In addition, within our presentation and in today's prepared remarks, adjusted EBITDA and adjusted EBITDA margin are referenced. It is important to note that these are non-GAAP financial measures that we believe are useful metrics to better reflect the performance of our business on an ongoing basis. A reconciliation of these non-GAAP financial measures to their most directly comparable GAAP financial measures are included in today's presentation, which will be posted on our website. And with that, it is my pleasure to turn the presentation over to Tattooed Chef CEO, Sam Galletti.
Thank you, Rachel, and hello, everyone. I'm excited to welcome you to our first Analyst Day. I am pleased to have members of our senior leadership team with me today, and I think you will enjoy hearing from each of them as we progress through the presentation we have prepared for you. First, I would like to provide a business overview of our company. Then I will introduce you to the team and let them dive into their areas of expertise. On slide 4, you will see the Tattooed Chef has evolved from an importer of Italian vegetables and products to a highly disruptive lifestyle brand that is capturing significant market share, and due to our unique products and flavor combinations, growing the frozen plant-based food segment. In 2010, we started selling private label products into Whole Foods and Trader Joe's. In 2014, Sarah, our Chief Creative Officer, joined the team, and in 2015, we renamed the company Itella International and started manufacturing in our current facility in California. In 2017, the Tattooed Chef brand was created as we decided to pivot the company's focus to plant-based foods. Fast forward to 2019, we launched 12 additional SKUs in the club channel under the Tattooed Chef brand, nearly tripling our revenue from 2017 to 2019. In 2020, we took the company public via SPAC with Form Merger 2 and renamed the company Tattooed Chef to focus on building the brand, which is expected to remain the primary driver of our company's growth. This year, we've also increased our production capacity and launched new SKUs, bringing our total SKU count to 38 for 2020. In the last 5 years, our compound annual growth rate is 63% per year. Slide 5 illustrates how the U.S. frozen food market is defined. Our prepared plant-based meals, meat alternatives, pizza, vegetables, and other offerings compete in a $33.9 billion subcategory. We also plan on entering the $12.6 billion dessert segment with many delicious plant-based offerings. Also, our existing footprint in Italy will allow us to expand globally and compete in the $380 billion global frozen food market. Growth in the frozen food category has been primarily driven by recent product innovation as a response to increased demand for healthier alternatives and convenient options. Plant-based pizzas, pastas, and meals are significant growth drivers. Millennials and Gen Zs are gravitating towards frozen food sections due to convenience for fresher, great-tasting, and unique plant-based foods. The Tattooed Chef provides delicious plant-based food options using sustainably sourced ingredients. We thoughtfully create food that offers convenience without sacrificing quality, nutritional value, or freshness. At our core, we are innovative with the products we are creating, putting us in a position to disrupt the vibrant, growing plant-based food industry. In addition to our product innovation, our operations are vertically integrated and allows us to deliver exceptional and profitable growth. We anticipate generating $222 million in total revenue in 2021, reflecting a 58% compound annual growth rate in 3 years. In 2020, our Tattooed Chef branded sales have become a higher percentage of our total than private label, which is how we began the company. In fact, the first 9 months of 2020, our branded sales exceed $60 million, showing a remarkable 640% increase year over year. You will also hear us make this comment several times today because it is so important to note. We achieved this growth in branded sales by ourselves. Only in the fourth quarter of this year did we hire a marketing firm to assist us in expanding brand awareness and sales of branded products that will launch in January 2021. We will talk more about our marketing and communication plans in a few minutes, but we are very proud of establishing this brand with no spending on marketing to date. We now have the financial resources to support efforts to truly accelerate our brand, and that is what we plan to do. As a result of this merger transaction, we now have more than $90 million in cash and very limited debt. We plan on using this cash to reinvest in our growth and opportunistically pursue strategic M&A. Lastly, we have a vertically integrated operating model with 200,000 square feet of manufacturing space. In 2020, we leveraged this model to double our capacity output from the prior year and expect to do so again in 2021. I firmly believe we are in the early innings of the Tattooed Chef's growth story. We expect $148 million in revenue for this year, which, as I mentioned, has been with little to no marketing. The Tattooed Chef brand has untapped potential. We believe that given the white space within the frozen food aisle, we can get to $300 million in revenue, primarily from product expansion in current and existing retailers, new platforms like desserts, and increasing our SKU count to over 200 through innovation. We see a path to $500 million in sales as we look to expand beyond the frozen section and into the grocery aisle, and we'll continue to diversify channels too. We envision the Tattooed Chef brand in both food service and convenience stores, and we'll look into potential licensing opportunities. We also see ourselves expanding internationally, given our manufacturing footprint in Italy. We are already in UK and Costco today, and have recently been approved for Costco Mexico as well. Turning to slide 9, I'd like to introduce the management team. Starting off, I'm Sam Galletti, President and CEO of Tattooed Chef. I've been in the food industry for over 35 years, focused on packaged food production and marketing across a wide range of food segments. I've started and sold food businesses before founding the company. I would like now to have my colleagues introduce themselves, and then you will hear from each of them individually. Sarah?
Hi, I'm Sarah Galletti, Chief Creative Officer and the Tattooed Chef. I created the brand and joined the company in 2014. I look forward to sharing my experience, passion, and vision for the company in a few minutes. Stephanie?
Hi, I'm Stephanie Dykman. After approximately a decade in the food industry, I joined Sam and the team in 2017 and currently serve as the Chief Operating Officer. Matt?
Hi, I'm Matt Williams, and after 25 years in the food industry, I joined the company in July this year. And I'm very excited to work with Sarah and the Tattooed Chef team as we embark on the next phase of our growth and development as a national leader in the industry. Chuck?
Thank you. I'm Chuck Cargile, the CFO and newest member of the Tattooed Chef senior leadership team. I have 25 years of experience with public companies, both as an executive and as a board member. Sam, back to you.
Before the team provides their updates, I would like to highlight that we have an outstanding board of directors. Their names are shown on slide 8, and more detailed biographical sketches are included in the appendix as well as on our IR site. I am joined on the board by 8 seasoned and engaged executives with a broad and diverse base of expertise. Now I'd like to let the team talk about our business, and we will start with Sarah.
Thank you, and hello to all of you. I am excited to speak to you today about Tattooed Chef's brand identity and the vision of the brand going forward. Tattooed Chef products are Italian-grown and LA-made. We are very proud of our roots and history of using products sourced from Italy and manufactured in Italy and California. We care deeply about every step of the process, so much so that we choose to grow a lot ourselves in order to literally follow the ingredients from seed to shelf. Our items are created by chefs, me. And as a chef, I love to innovate to keep the dining experience fresh and fun, and of course, delicious. We also try to make our products as accessible as possible. Consumers are able to find our products at national retailers and can enjoy our plant-based food at a competitive price. The Tattooed Chef brand is for every lifestyle. We attract consumers of all ages and demographics. We thoughtfully design our products so there is little to no prep. You're able to eat well no matter how busy you are, and we've seen that has really connected with the next generation of consumers. We embrace our edgy branding and translate that into eye-catching packaging too, allowing us to stand out on the shelf. Now I'd like to show you a video and give you a glimpse into some of what we do at Tattooed Chef.
Hi, I'm Sarah Galletti. I am the founder of Tattooed Chef.
I hope you enjoyed the video. Now I would like to spend a little time discussing our brand and product portfolio and innovation. Slide 14 illustrates what we see as our 5 major categories that the Tattooed Chef brand portfolio currently plays in: single-serve bowls, smoothie bowls, vegetable blends, meat alternatives, and plant-powered pizzas. The important thing for us is the range of options we are able to provide retailers and consumers. Our product portfolio spans breakfast, lunch, dinner, and even snacks and desserts. The Tattooed Chef can provide products for every occasion and dining choice. I've developed so many exciting, innovative, branded products just in the last 3 years. We've grown from having 2 branded SKUs in 2017 to having 38 today, and committed for 62 in 2021. We are disrupting the freezer aisle by being able to spot food trends quickly and having a vertically integrated business model. We were the first to go to the mass market with cauliflower crust pizza, as well as acai bowls, and our products are differentiated from the competition. Consumers are looking for products that resonate with them. All of the Tattooed Chef products have been thoughtfully developed and make consumers feel they're part of what they're making. Retailers are looking for companies that they can trust to partner with. They come to us for innovation, ideas, and we work in tandem with their teams to consistently and quickly launch new products. And we're seeing that our sales are hitting the thresholds for the retailers, so we know we are tapping into what consumers want. We are not peas and carrots. We're changing the frozen food category. bringing a fresh vibe to the frozen food aisles, and consumers and retailers are recognizing that. As I mentioned a few moments ago, we have a range of platforms from bowls to veggie blends to pizzas. We recently launched 2 new meat alternative products using our own formulations: the cauliflower pizza bowl with plant-based pepperoni and the plant-based sausage breakfast bowl. The pizza bowl is 14 grams of protein and is a top-rated item at Sam's Club. The breakfast bowl is 23 grams of protein and is our first breakfast item. We expect to launch 3 new items featuring meat alternatives in the club channel in 2021. I approach innovation as the food I want to eat. Think about it. Do the traditional food companies even eat the food they make? Our food has to connect to the people eating it and has to taste delicious. I also love nostalgic innovation, putting a plant-based twist on classic dishes consumers know and love. Plant-powered pizza and pulse alternatives are easy for consumers to connect to, and consumers are also get excited that they can make Mexican-style street corn that they'd get from their favorite food truck, right in the convenience of their own home, or have an acai bowl for lunch without having to go to the juice bar. We believe the Tattooed Chef brand can go beyond the freezer aisle and into ambient products in the grocery aisle, like snacks. As a private company that was historically focused on private label, there was not a heightened focus on communications. Now, as we aggressively expand the brand, we have a robust communications plan. We recently hired Nitro C, one of the leading national marketing firms in the U.S. Nitro C has developed successful campaigns for Google, HelloFresh, Disney, and Marvel, just to name a few. They are assisting us with targeted campaigns for retailers, broad-based commercials and advertising, and marketing intelligence. We anticipate spending approximately $15 million on this initiative starting in 2021. We have also newly hired Praytel for public relations, and as most of you know, Rachel Perkins-Olsch coordinates our investor relations. Having spent very little money on initiatives like this in the past, we are extremely excited to see the enhanced brand awareness this approach will provide us. Before Matt dives into our sales expansion and growth plans, I wanted to briefly touch on our recently launched e-commerce site. We went live just 7 weeks ago on October 26th and are pleased with our performance so far. The e-commerce site felt like the next step in the evolution of Tattooed Chef, providing greater accessibility to Tattooed Chef products, enhancing product and brand awareness, and creating a stronger one-on-one connection with consumers. In terms of product performance, the Hangover Bundle, comprised of Mexican-style street corn, buffalo cauliflower, cauliflower crust cheese pizzas, and cauliflower mac and cheese bowls, is our best-selling item on the site based on revenue. And we plan to launch exclusive products to e-commerce in the future, as well as a subscription service. With that, I would like to hand off to Matt to discuss our sales expansion plans.
Thanks, Sarah. I think to put our efforts in perspective, it is important to see where we have been. To me, it is amazing to think that we are already on the verge of exceeding $148 million in annual sales, and until a few months ago, this is what our resources and infrastructure consisted of. Sarah and Sam were a 2-person sales team, working with 2 brokers focused on growing the Tattooed Chef brand in 2 channels, club and mass merchandisers on a national level. Then, contrast where we are today. In just a couple of months, we have set a strong foundation for channel expansion. Let me walk you through the significant progress that we have made. Starting on the left, the Tattooed Chef brand has signed distribution agreements with 2 of the largest grocery and specialty food distributors in the U.S., UNFI and KV. These relationships, as well as Lipari Foods in the Midwest, give us access to over 60,000 retail outlets that the Tattooed Chef brand is not in today. We will have Tattooed Chef product in these warehouses in Q1 and are now set up to be able to access every grocery store across the United States via a distributor or a warehouse program based on the retailer's preference. We have also built out our broker network with leading firms in their channels of expertise. These partnerships give us access to more than 300 sales and category management resources to help us grow our Tattooed Chef branded business in grocery, natural, club, mass, and military. We are also poised to continue to expand our e-commerce platform through our partnership with PSS, which gives us access to over 90+% of the United States via 2-day ground service, which is critical for us to scale our e-commerce business profitably. At the bottom of the page, you can see the additional sales resources that have been added to the team in addition to Sam and Sarah. Myself included, we now have 5 additional selling resources on our staff internally that were not here 2 months ago, with an average of 15+ years of industry experience. With this foundation, we are poised to aggressively expand the Tattooed Chef branded portfolio in our priority channels in 2021. As we all know, Tattooed Chef has significant white space opportunities, especially in the grocery and natural channels, and we have not been sitting on our hands. While this list of customers does not include our total number of retail targets, it shows how quickly we have been able to mobilize our broker and sales infrastructure. In the last 60 days, we have opportunistically introduced the Tattooed Chef to more than 20 new retailers, many of whom are listed on this slide. Major retailers that are a strong fit for the Tattooed Chef brand and currently have relevant categories under review. We are confident in the coming months that these new proposals will be awarded and turn into revenue in 2021. I really like this next slide you're about to see, which shows the progress we have already achieved in a short time to make the Tattooed Chef a national brand. And here are some of the highlights. Since last year, we have increased our points of distribution by 155%, and we are currently in 4,272 stores with the Tattooed Chef branded products today. You can find the Tattooed Chef brand in every region of Costco in the United States and also available in the UK. The Tattooed Chef brand is available in all 599 Sam's Clubs nationally. The Tattooed Chef brand is available in 65% of the Walmart supercenters and neighborhood markets today, and is also in 436 Targets. The map to the right illustrates our Tattooed Chef branded presence nationally, where we average 5.4 units or items per store with our 4 retail partners, Walmart, Target, Costco, and Sam's. The heat map identifies the number of items per store based on the total SKU count. The darker the color, the more Tattooed Chef SKUs available at a specific store. In 2021, we plan to be in 10,000 stores and have 65,000 points of distribution, which is a 150% increase in store count and a 180% increase in points of distribution. We are confident we can achieve this through store and SKU growth with our existing customers, as well as new white space customers we are currently pursuing with our broker and sales team. The growth in distribution is further illustrated with the success the Tattooed Chef brand has had at Walmart, which we believe is a strong indication for our ability to scale in retail. On the left side of the page, you will see that this time last year, 5 SKUs of Tattooed Chef brand were available with a total of 2,164 points of distribution. Our highest store count on our top selling SKU was available in 467 stores, mostly Walmart neighborhood markets. Fast forward to this year, and you can see on the right that we have significant momentum with Walmart. We are now in supercenters and neighborhood markets and have added 6 new SKUs in 2020, increased our points of distribution 7-fold, and our largest store count for a Tattooed Chef SKU is 2,683 stores. Additionally, the 5 SKUs that we had in distribution this time last year also gained Walmart stores, which signifies that the Tattooed Chef brand is thriving, driving incremental sales for the category, and reaching new consumers. We wanted to give you a deeper dive into some of the key indicators on how the Tattooed Chef brand is performing at retail. With our recent distribution gains at Target and Walmart, Tattooed Chef brand is starting to build case studies on how consumers are reacting to the brand based on velocity and basket interaction. Since we launched 2 SKUs of smoothie bowls at Target, our unit velocity is generating $23.63 per store per week, which is exceeding ours and the retailer's expectations for launch. In Target, our #1 selling SKU is outperforming the leading acai smoothie brand as measured by IRI Food on velocity, sales per store, and average retail price. This early success gives us confidence that this can translate into broad retail expansion. We wanted to provide a different perspective on how the Tattooed Chef brand is performing at Walmart. When you look at the performance of one of our top-selling SKUs, cauli mac and cheese, we are encouraged by the fact that 15% of consumers at Walmart purchase more than 1 cauli mac and cheese per trip. We have a strong repeat cycle, and 33% of the baskets include an additional Tattooed Chef brand in addition to cauliflower mac and cheese, all strong indicators for a brand that will scale in the immediate future. I look forward to answering any questions you have, but first we will ask Stephanie to discuss operations.
Thanks, Matt. We have 2 manufacturing facilities that have over 200,000 square feet of manufacturing space at our disposal. During 2020, we have expanded our production capacity and doubled the amount of product that we can currently produce. Our facility in Italy added 4 new lines to the manufacturing floor and 2 new packaging areas. In Paramount, California, we added equipment to triple our capacity on bowls and double our capacity on pizzas. In 2021, Italy is adding equipment to triple our riced cauliflower and vegetable production, expand our capabilities on vegetable gnocchi, and increase capacity on blending vegetables. Paramount will continue to add equipment to increase capacity on the lines to ensure that we can meet the new demands that we expect and our sales team is pursuing and winning. The most amazing part of all of this is that we will do this within our same manufacturing footprint. By investing in new equipment and constantly evaluating our processes, we continue to increase our capacity, provide better yields, and make our products more efficiently. This will allow us to expand our future gross profit margins by increasing the output of the facilities with the same fixed overhead expenses. One of the things that sets us apart from our competition is that we are vertically integrated. The ability to pivot and prioritize our production is another key factor in our growth. By being the manufacturers of our own products, we are able to take a new idea from concept to production to shelf in as little as 3 months' time. This will allow Tattooed Chef to be able to continue to introduce new items into the marketplace that are currently on trend and stay ahead of our competition. We have an established management team with over 250 years of combined experience in manufacturing food products. Each member of our senior management team brings the skills necessary to our team to provide continual improvement to not only our manufacturing processes, but to also ensure that the process from product ideation to commercialization does not affect the quality of our product. Combine that with the capacity growth that we have and are achieving, and there is nothing to stop us from continuing to expand Tattooed Chef into the budgets that we have built for 2021 and beyond. As I mentioned before, we have two facilities, one in Proceti, Italy, and one in Paramount, California. Our facility in Italy is 150,000 square feet, and it sits on 17 acres of prime farmland. We are located in the middle of a huge farming area and meet weekly with an agronomist to discuss the crops that we are planting, as well as weather, harvest conditions, and the overall expectations for crops throughout Italy. We work very closely with the growers all over the country to ensure that we can meet demand for our products. The vegetables grown in Italy are some of the best in the world and are non-GMO certified. Due to the cost of produce, both conventional and organic, and controlling the production, we can ensure both competitive pricing and high-quality ingredients. The majority of the products that are produced in Italy are ready for the retail shelf, meaning that there is no further manufacturing that needs to occur. There is a small percentage of materials, such as riced cauliflower, that is used in Paramount in items that are produced there. In California, the production facility is 50,000 square feet and is set up to produce value-added products such as plant-powered bowl and tray meals, acai and smoothie bowls, plant-powered pizzas, and our Mexican-style street corn. The production facility allows us to meet short timelines that are required with an innovation-driven business model. We also handle all the distribution of products across the United States, allowing us to meet customer delivery requirements, plan key locations to keep our products, and manage our inventory to minimize waste. Both our facility in California and in Italy operate under the most stringent of food safety programs. We are proud of the fact that both facilities have received a grade A from our BRC audits and also carry numerous other certifications that ensure that our products are not only safe, but give customers the confidence that our products are certified by a third party. Each of these certifications require an external audit and constant review of an internal program to ensure that the certification requirements are met. This is one of the ways that people connect with our brand and shows them our commitment to providing high-quality products that range from non-GMO, organic, gluten-free, kosher, and plant-based certified. Chuck is going to explain how all of this works together and translates into our financials.
Thank you, Stephanie. Slide 31 provides a summary of our year-over-year performance. Driven by the growth in the sales of our Tattooed Chef branded product, total sales in the first 9 months of 2020 increased 87% year over year. At the same time, gross profit increased 70%. As we explained in our Q3 earnings conference call, the gross margin declined slightly due primarily to our successful first-time promotional campaign with Costco. The $1.3 million cost was fully expensed in the third quarter and has already resulted in increased demand and sales of Tattooed Chef branded product and has enhanced our competitive position with Costco. Also, the timing of expenses to satisfy increased customer demand and some variations in the mix of products. We anticipate improved gross margins in Q4 2020 and beyond as we leverage fixed costs on higher volume and benefit from the new equipment and enhanced operating efficiencies, as just explained by Stephanie. Our adjusted EBITDA year-to-date 2020 increased 127% to $10.6 million, or 9.7% of sales, all while navigating through the rapid growth and the demands of successfully becoming a public company. And looking back over the last 4 quarters, we've generated almost $13 million of adjusted EBITDA and 9.4% of sales. Revenue in the first 9 months of 2020 of $109 million reflects 87% growth versus the comparable period of 2019. More importantly, branded sales lead the way. $60.6 million year-to-date 2020, representing an impressive increase of 645% year over year. And keep in mind, as we've said before, we've grown our revenue and established a successful branded product with no spending on marketing promotions. We expect significant benefit from these marketing efforts in 2021 and beyond. We have shown significant growth over the last several years through a combination of existing product lines and new product development. We expect that successful growth to continue and to be augmented even more as we reap the benefits of our marketing efforts, our public relations, our communications, and our e-commerce. Slide 34 gives you a glimpse into our expectations for 2021 and beyond. We're confident that we will continue to grow beyond the $222 million we've already guided to for 2021, including $300 million in 2022, $500 million in 2023, and eventually to $1 billion that we think we can do by 2026. As we continue to grow organically and add volume and scale through acquisitions, we expect to continue to leverage higher gross margin percentages. We also expect to expand our adjusted EBITDA margins from the high single digits of late to mid-teens and eventually in excess of 20% of sales. In addition, it's worth noting that we have $90+ million in cash on hand. That cash, augmented by the cash we will generate from operations and any equity sales, can all be used to fuel additional organic growth and be used for strategic, accretive acquisitions. But please note that no acquisitions are included in the 2021 guidance. I'd like to call your attention to other information that's in the appendix, which we encourage you to review if you would like. Now I'll kick it back to Sam.
Thanks, Chuck, and thanks to the team for their excellent insight. I hope you can see why I'm so energized to have this great team to work with and great opportunity with the Tattooed Chef brand. Now I'd like to answer any questions you have.
We will now begin the question and answer session. To join the question queue, you may press star then 1 on your telephone keypad. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star then 2. We will pause for a moment as callers join the queue. The first question comes from George Kelly with Roth Capital Partners. Please go ahead.
Hi, everybody. Thanks for taking my questions.
Thank you.
So I have a couple for you, and then I'll turn it over and get back in. But wondering to start if you could talk about what the advertising plan is going to look like. So if you could give any more detail when we're going to start seeing it, and just what are you starting with? What's it going to look like?
So George, this is Matt. I've been working with Sarah, obviously, with Nitro C on this to make sure that we approach it appropriately because of our distribution build. So, obviously it's going to be heavy digital, obviously heavy content driven through connected TV as well as connected radio, as well as a digital campaign. The map that you saw on one of the slides that I present really kind of highlight how we're going to really geo-target very specific stores with obviously a very specific consumer to really get after this kind of 93 million population of plant-based intenders that we see as our targeted consumers. So, and then as our distribution base begins to expand, we can obviously pivot that towards a broader approach to how we talk to consumers.
Okay, and maybe just continuing on that, Matt, do you feel like the brand has decent awareness, or is this just about introducing the brand, just getting it, showing the product set and getting the brand in front of people because it's still pretty underknown out there?
It's not as underknown as I expected joining the team. I think that, the work that Sarah did in terms of engaging with her consumers through her social platforms, there is a pent-up demand for this brand. And I think in a pent-up demand comes in the form of new distribution. I think that's why you saw, and we were so happy with our e-commerce launch, was because there was this pent-up demand for consumers could buy the brand. And brand awareness that obviously the 4 largest national retailers in club and mass can definitely translate for us into other channels of business. So we think this is going to support that. Really, it's all about building trial and pulling it off of the shelf. So that's why we're really excited about that. I'll turn over to Sarah.
Yeah, and also we haven't spent any money on marketing, so this is really a chance to get the brand out there. And, obviously we're really excited to really show the world who we are. And with this marketing spend, we're gonna get to. So we're really excited.
Okay, and then a question on new products for 2021. You mentioned expanding into new categories like ambient products and desserts. Is that something we should expect next year?
So, today we are, most of our products are located in the frozen food section. We do have plans to tackle non-frozen categories, and our innovation will continue, and we're constantly assessing these categories. We're really looking at, 1 to 2 years.
George,
okay.
The 24 SKUs that are on for 2021, those are just our frozen additions, new creations that Sarah's come up with that are still in our wheelhouse that we're moving forward with right now. And as far as like ambient and frozen desserts, she's charging on multiple innovation fronts. So, there's so much to just, really tighten it all up, whatever those things and timing and everything. But, we're working on different paths at the same time. So we're still just full speed ahead on our regular frozen category where we have our sweet spot, but then we're also looking at multiple different concepts to go forward with.
Okay, and then just a financial question, then I'll hop off. So in the projection, I think there was more detail about expectations for next year, and I think I saw EBITDA of $8 to 10 million. And so the question is, what incremental investments are you including next year that you can isolate? I think it's a $15 million advertising spend, and then I imagine that there's some corporate costs or other public company kind of related things. Is there anything else that you can just help bridge to next year?
Absolutely. First, we are excited about the $15+ million that we'll spend in marketing with Nitro C. One of the slides that Sarah presented talked about the other communication avenues that we're going to spend on that we haven't in the past. So that's in addition to the $15 million marketing plan. There's also, as you mentioned, the public company costs, which include directors and officers insurance, which is non-trivial, about $2.5 million for next year. We now have a 9-person board of directors that the company didn't have before. That will probably be $1 million or a little bit more. We're also adding people. I mean, Matt is so excited about the team that he has added, and it's going to reap tremendous benefits, but it comes at a cost. So there's the public company costs, and then also the investments that we make to keep up with this tremendous growth and expansion that we have.
Okay, that's helpful. Thank you so much for doing this and hosting this day too. This has been very helpful.
Thank you
so much.
The next question comes from Rob Dickerson with Jefferies. Please go ahead.
Great. Thank you so much. Thank you for the presentation as well. So I guess the first question I have is just on the top line guidance. I guess, the top line guidance for 21 at least suggests somewhere around like 50%, growth year over year. But that one slide you have which shows the new doors that you hope to get next year incrementally, and then also the new distribution points. I mean, that's, both of them are north of 100. So I guess the first kind of simple question is just, does that guidance include, all those new doors you expect to get? Because it seems like the bridge that you show like previous SKUs and then new SKUs. So it seems like maybe the revenue guidance doesn't include the full contribution from the new doors to the distribution points. I'm just trying to kind of, make logic of the revenue guidance. That's all. Thanks.
You're welcome. Thanks for the question. We're excited to answer that because we are really, really encouraged by the progress that Matt and his team are having in the field. And I hope that came across in the comments that he made and the slides that we showed. The increases and the traction that we're making is absolutely included in the guidance. I think the variable that is hard for you to estimate, it's even hard for us to estimate, and we're inside, is the timing of when all those hit. So if we said that every one of them was in January 1, then yeah, it might be more than $222 million. But Matt and the team, Matt's been at this for a couple of months. His team is just being hired. The progress, although really impressive, doesn't kick in January 1. So if you're doing the math for a full year, that might be where you get off a little bit. But Matt, you want to talk a little bit more about the traction and how that plays out over the year?
Yeah, no, I think you explained the financial side of it and the revenue side of it well. I mean, the reality is, Rob, is that we're in 5 separate frozen categories, and they're on 5 separate reset cycles. And so we're presenting to buyers. And so the goal by the end of the year is to get to this number, but that revenue will come in and sequence itself in at different months throughout the year. And I think that is why we have the guidance as it is. But at the end of the year, we expect to be in, like I said, the 10,000 stores and which is about 5,700 new stores and averaging about 7.3 items per store at the end of the year.
Okay, got it. Cool. Makes sense. And then I guess my next question is just on the gross margin piece, kind of vis-a-vis the EBITDA margin. I mean, I understand the incremental costs you just laid out, which all makes logical sense. The gross margin, though, it sounds like mostly kind of sourcing and fixed cost absorption. The expectation is for a nice bump, right, in 21 and kind of thereafter. So maybe if you could just explain kind of briefly, how you're able, to, go from, I don't know, call it mid-teens-ish gross margin for 20 to, 20 to 25 and 21.
Yeah, let me first just talk about the transition and what we're seeing, and then most of that improvement will come from leverage on the increased revenue and the operating efficiencies that Stephanie referred to. So you will see that. I'll remind you that we talked in Q3 that gross margin was abnormally low, and we tried to explain why that was. So we expect to see improved gross margin right now in Q4 when we report Q4, and then we will get increased benefit as we go forward. And Stephanie, maybe you can talk specifically about the fixed versus variable and the efficiencies that we anticipate.
As we continue to expand on the capacity within the facilities and in that same manufacturing footprint, we're obviously going to produce more product, take that overhead, spread it over more product in the same amount of time. And so you're basically taking that number, dividing it out by more pieces or pounds or however you want to calculate that. And then you're talking about a lower cost and higher margins. And that's really what that important drive of in the same manufacturing footprint means. We doubled capacity in 2020, but we didn't do that all as of January 1st. And so we're confident in that gross profit margin number that we're projecting based on when those efficiencies hit within the lines. And as Chuck said, of course, taking out Q3.
Okay, good answer. And then a couple other quick ones, and I'll stop talking. The next one is just kind of on acquisitions. I know you said, the revenue guide next year doesn't include acquisitions, but sounds like, acquisitions likely are part of this go-forward strategy, especially given the balance sheet. So, you kind of view it as, hey, yeah, if we have a great opportunity in 21, there could be an acquisition because we'll look at it opportunistically. Or do you feel more like, hey, let's kind of get our base set in 21, and then, as we go forward, that acquisitions kind of in theory should be part of our top line algorithm? If that makes sense.
Sure, makes good sense, and I appreciate the question because it's something that we think about and work on internally a lot. We absolutely expect to do acquisitions. The acquisitions are going to help us in expanding the brand and also expanding our capacity as we grow the revenue. The thing about 2021, having done 24 or more acquisitions in my career and looked at a whole lot more, if we had something that we were looking at right now trying to close, by the time we get through due diligence, by the time we get through contract negotiations and close a deal, we'd be lucky to have half a year anyway. So even though we are aggressively looking at opportunities that are strategic and are accretive, just the gestation period to get them done appropriately wouldn't have a huge impact on 2021. There may be some that happen, and if they do, they would be incremental. But right now we're saying it's more of a 2022 and beyond impact.
Okay, fair enough. And then quickly, kind of broadly speaking, just kind of have a question on the competitive dynamic and the landscape that's out there. Look, the brand is cool, right? Looks cool. Sarah, you seem cool. Everyone's cool. And, the product's on trend. Yeah, hey. It's true. Product's on trend, a lot of great offerings. Seems like there's good probability, to get, incremental, stores and stickiness kind of across the consumption backdrop. But quite frankly, you're not the only one that kind of sees that, right? I mean, it's on trend for a reason. So how do you think about, how you innovate? How Sarah, you're the creative, right? How you create, these products so that they are sticky, right? That people want to buy them and repeat, relative to all the big competition that's out there that obviously will have numerous teams and people and R&D departments and what have you trying to chase the growth, right? Because it is, whenever there's growth, there's competition. And you've done very well so far. Just kind of curious, how do you, when you go to bed at night, you think, okay, this is what we have to do to make sure we stay a step ahead of those guys, right? And that's all I have. Thanks a lot.
Yeah, for sure. So, whenever I develop products, I really create with intent. And, there's a purpose behind every item and how it connects and making sure it performs well. So, consumers are becoming more and more perceptive to product innovation, and they latch onto products with purpose. So, we're tapping into this concept of what people truly want to eat. And on top of that, it's our packaging, the items are trendy, as you're saying, and we have a proven track record of creating delicious food. And like I said earlier, we're changing the frozen aisles. People feel confident pulling our products off the shelf. And, our products are thoughtfully designed and chef created, and, consumers are feeling like they're a part of something. And also, like, we have such an interactive element when we create our items, and it's this personalization in you know, consumers understanding who the Tattooed Chef is and who's making their food.
Okay. Thank you so much. I really appreciate it.
You got it. Thank you so much.
The next question comes from Brian Holland with D.A. Davidson. Please go ahead.
Yeah, thanks, and appreciate the presentation. Very helpful today. So, Rob, first of all, if Rob says you're cool, then you're cool. So you got the stamp, right? But if we, trust me. So if we look, Rob took one of the questions about M&A. You know, Tattooed Chef is the brand. It's very new. It's very nascent. So really, you can craft it however you want. So maybe just to clarify here, as we think about, you know, acquisitions going forward, this is really about capabilities and capacity and less about adding brands, right? Because I would imagine at this point, you know, in theory, this brand could be very expandable as you build a base.
Yeah, if I understand the question, it's are we looking at brand expansion or things that fold into this brand? And it's very much so, just like you say, we are launching this brand and have had tremendous success with the brand, with no spending, you know, 645% growth year over year. So yeah, we want to continue to fuel that brand. And that's what we're looking at for acquisitions. So things that will fold in and things that will give us more capacity to expand.
Okay, yeah, no, that's exactly what I was asking and leading into, so appreciate that. And then forgive me if I missed this in your remarks during the presentation, but when we look at the square footage on capacity and room to expand, just a sense how much or what your current capacity situation would support from a revenue standpoint. Again, forgive me if I missed this and you said it.
Not a problem. So currently today, we have about 50% capacity available within the facilities, and we continue to expand that capacity based on our expected sales growth. We are more than covered for 2021. We will be covered partway into 2022 for sure, but every day that changes. Every day that we get to sit down and look at our process, look at what's happening on our floor, get with our management team, evaluate equipment, that capacity opens up and we become better at what we do. And that's really what grows us as a company, and I think differentiates us with our employees as well, is our senior management team is amazing, both here and in Italy, and they want what's good for the company, the same as everybody else. And so there's a little bit of philosophy that helps drive the team and puts us all together in the same path. And that's what really helps us. It's not just about equipment. It's about sitting down with the team and everybody saying, hey, this is what we should do. This is where we're going to go. And so both here and in Italy, we have that cooperative environment that encourages our team to have input and help us to continue to grow revenue and capacity within the facilities.
Appreciate the color. Last one from me, and then I'll hop back in the queue. Just, you know, always curious when you have sort of these emerging brands or sub-segments, you know, who's winning, who's losing. And what I mean by that is kind of, you know, who does the Tattooed Chef displace? On some level, I'm sure it's fairly obvious, you know, kind of these legacy, stale, repetitive, you know, tier 2 and tier 3 SKUs. But in the frozen door, you know, this dynamic's even more pronounced because the square footage is quite fixed. So if we try to triangulate, you know, your innovation plans and the kind of shelf space that you own right now, what have the retailers told you about kind of the runway for your brand on their shelf, the number of facings that, you know, they might be able to support, and where do you think that's coming from? I'm not asking about specific brands, but just kind of, you know, high level, because I think it would give us a sense for, you know, how easy it will be for you to pick up the incremental shelf space that you're aspiring to.
This is Matt. I'll take the question. So, I've been in the frozen business for a lot of years, and, one interesting statistic out there is that usually about 20% of the SKUs of a brand generate about 80% of their revenue, and that is an opportunity for us, right? I think that, the fact of the matter is that as even every retailer has gone through this COVID dynamic, there's been holes on the shelf, and that's because a lot of brands that are on the shelf today are producing SKUs that are unproductive. And so we see that as an opportunity. We actually use that as a selling point when we're talking to our retailers about the fact that we're vertically integrated, we control all of our manufacturing, and we do have a very cool brand, which I think that combined obviously gives us a right to play. When you think about number of SKUs, we think that we can be 20 plus SKUs on the shelf in a grocery store, right? The average retailer right now on leading brands, some of the leading brands are over 30, but we think that we can get to 20 very easily because we're in such dynamic and differentiated categories. And the other thing I'll add is,
thanks again. Oh.
Yeah.
Good.
Yeah, I was just going to add, being able to work with a reputable broker like Alliance Sales and Marketing gives us insight into great data, which allows us to walk in and take the data that we already have and then translate that into a selling story for a specific retailer. So that combined, we think is going to be a good add.
Great, thanks. Appreciate all the color, everyone. Best of luck. Look forward to continuing to speak with you.
Thank you so much.
The next question comes from Rupesh Parikh with Oppenheimer. Please go ahead.
Good afternoon. Thanks for taking my questions. So I had a few financial questions I want to cover. So first, very strong growth. I think you guys, on one of your slides, 87% year to date. I'm just curious what type of impact you believe COVID could be having on the business this year.
So the COVID question always comes up, and there's two sides to that. I know that there's always the concern with COVID and the effect on sales. And to be honest with you, if we look at our 2020 growth path, we were already projecting this amount of growth prior to COVID hitting. And we were already scheduled in for those commitments and everything else. Being a frozen food manufacturer insulates us a little bit from that drive. You will have the pickup from people who are eating more at home than eating out in a restaurant. But an individual's freezer is only so big. They can only buy so much product at a time, and we don't see some of the spikes that people saw who are in ambient product or in the grocery aisle. It's just not possible to continue to fill the freezer unless you're going to eat the food, and we encourage everybody to eat Tattooed Chef all day, every day. On the other side of it, from a manufacturing standpoint, we have not seen the effects of COVID that some of our other businesses in the same environment have seen. We work hard to keep our employees safe, and by being in food manufacturing, our employees constantly wash their hands, they sanitize every time they come in. We have added masks to the facilities. We feel that we had a preemptive strike because COVID hit Italy first, and we were there. And we were talking to other people we knew in northern Italy as they were suffering from COVID at that point in time. And so public health came by in Italy, and they have a much longer name there, but told us that we were one of the best facilities. LA County Public Health has been out to see us. We're in good shape, and we want to keep our employees healthy and safe, and we remind them of that. Going into 2021 sales, we don't foresee COVID playing any part in our increase in sales. It's us getting our brand out and going into more stores, expanding our product line, and as Matt has mentioned, those wonderful 10,000 additional points of distribution will really help that growth. It's not as much about COVID as it is having a healthy, innovative brand out on the shelf.
Okay, great. And then maybe two more smaller housekeeping questions. So I know you have a significant business at Costco. I was just curious how much of your Costco business is private label.
It's none, actually. Every item that we sell at Costco is branded. We don't have any private label there at Costco at all. We don't expect to sell private label to Costco, and we continue to focus on the brand across every channel of business that we're in.
Okay, and then my final question, just, the recent Nielsen data shows that your vegetable sales have declined. If you can provide any more color on what's driving that decline.
Yeah, we do have, as a brand that's been focused on the club and the mass channel, especially club, when you look at syndicated data, a lot of the items that we sell them during a certain period of time. Obviously, that's why people go to Costco, is for that treasure hunt, and it doesn't not include Tattooed Chef. So when you look at our business kind of on a 12-week basis versus syndicated data more long-term, you can see the real health that we have at the channel with veg. Our veg business annually is actually up 81% year to date. So it's an over $20 million business reported, and we're really excited about the growth that we're going to have there.
Okay, great. And sorry, maybe just one final question. So as you look at your strong branded growth this year, and clearly you guys have, you've not unlocked advertising for much of that growth. What do you think what's really driving that growth? Like, is it word of mouth? Is it really the quality of products? We'd just love to hear just what you guys think has really been driving, consumers really liking your products and the high repeat rates, et cetera.
I can speak to it from a sales perspective. I know that Sarah does a great job of engaging with her, obviously her loyal members of the TC fam, obviously digitally. But the reason why it's doing well is it's performing. We all know that retailers are looking at their data every single day, and our brand with no marketing is punching above its weight. And so, our velocities are strong, our sales per store are strong. We're getting great reviews on their own internal kind of websites. And you couple that with an aggressive marketing campaign for 2021, and our retailers are equally as excited about doing business with us as we are doing business with them.
Perfect.
Well
Great,
said.
thank you for all the color.
Once again, if you have a question, please press star, then 1. The next question comes from George Kelly with Roth Capital Partners. Please go ahead.
Hi, everyone. Thanks for taking me again. Just a few additional questions. So first, I'm not looking at this slide in front of me, but I believe that you had revenue going from 220-ish to 300 and then up to 500 the following year, if I'm not mistaken. And the question is what's causing growth to accelerate again a couple years out? And is there M&A? Can you talk about what organic versus acquired growth is, what's contributing to your post-2021 guidance?
Yeah. As you can imagine, post-2021 is not quite as precise as 2021. As we've said many, many times, the 222, we have very clear line of sight to that. So much of it is already committed. After that, we anticipate continuing to grow the brand. We'll expect to get the benefit from the marketing efforts that we've talked a lot about today that we're going to invest in. That's not going to impact 2021 very much, but we will start to see the benefit in 2022. We do anticipate that some of that $300 million will come through acquisition, because we're going to be, although we'll be careful, we are going to be aggressive in looking at things that are going to help expand the business. But we don't have, George, a split that says X of that is organic and X is acquisition. It'll be a combination of it. And as you can imagine, it'll be something around the $300 million. If we hit $300 million precisely, then that would be the biggest shocker. So there'll be some organic, there'll be some acquisition in the 300.
Okay. And then second question is about e-commerce, and I know it hasn't been that long since you turned that on, but can you tell us more about what you've experienced? And the prices are, the price per item is higher, and are you seeing that people are willing to pay a little extra for that convenience, and can it become a material part of the business?
Yeah, so this is Matt. I've been partnering with Sarah on the e-commerce launch, and so we actually did a pretty thorough analysis of our pricing strategy when we looked at other brands that were selling not only on shelf at retail, plus obviously through a direct-to-consumer site, to kind of compare the price-value equation of getting something delivered directly to your home. And our pricing is right within that range. We have been very happy with the amount of repeat purchases that we've been getting on the site. Our average order value is actually significantly exceeding kind of what the minimum order quantity is that you need to purchase and to make a purchase because of our order minimum. And so that, coupled with the fact that, you know, we have the great relationship with PSS, we think the business is very scalable in terms of giving consumers access to Tattooed Chef. Sarah obviously is planning on using the store, and she can probably add some color to this, as a way to directly connect one-on-one with our consumers and to really build a relationship with them and use it as a place to kind of experience and test new products.
100%. Yeah, we want to you know, put up some merch and some special ideas there, but Matt said it perfectly.
That's great. Thank you so much.
This concludes the question and answer session. I would like to turn the conference back over to Sam Galletti for any closing remarks.
Thanks again for joining our Analyst Day. We hope that you have a better appreciation for Tattooed Chef. Please don't hesitate to reach out to us for more information, and have a great day.